Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Tuesday afternoon edition. Today we're going to be talking about the housing market, about cryptocurrencies, and of course, just broad market analysis overall. Some interesting moves, especially the way we started off early, even pre-market, the way the market sold off and then kind of balanced themselves out a little bit. Still not the prettiest picture in the world, but I'm going to start things off. I'll start things off with housing, just because I want to address that because of some of the data that came out today. So we'll start there. And my lederhosen are packed. Jimmy, don't worry. I'm going to represent in my lederhosen, that is for sure. Let me start things off with just the housing troubles. I think many of us can see it with what's going on with the economic data out there, but I want to kind of show the facts. My opinions are my opinions, and your opinions are your opinions. Nobody knows for certain where things are going, but I like to look at the data and see if it can give me some clues as to where it's pointing for the markets to go forward. In this case, I'm specifically focusing on housing. So, as you know, housing represents a good portion of GDP. Ranges anywhere, let's say 14 to 16% of GDP, depending on the estimate and maybe the time of year. Probably fluctuates more than that, but the historical average is 14 or 15%. Now, if we see pain in that area, obviously that could hurt GDP, and you heard Jerome Powell mention repeatedly that he expects growth to moderate. That would certainly go in line with the declining housing market as well. So I brought up a whole bunch of charts here because I think that will help us understand where we're headed and where we've come from. So let's start things off not with David Warner. We'll start things off with this chart here, which came out today. This is the CaseShiller Composite 20 Home Price Index. And the reason I like this one is it simply gives you an idea of what's been going on with housing prices. And for those of us who purchased back in 2009, I purchased in March, thank goodness, great time to buy. I was rewarded by some very nice market gains. And, these were parabolic, crazy accelerated moves. And normally, like this rally I'm highlighting here from 2009 to 2010, big moves like that are usually followed by a significant pullback. And we see that happen multiple times, and there's a very accelerated move, just like we saw between 2012 right here. Maybe even better if I bring on my drawing tools, but 2012, this little run up right here, right? Huge run up from negative 5% all the way up to a positive, let's call it 13 or 14%. That's annual price appreciation year over year. So we went from a negative 5% in 2012, which was a contraction, obviously, right here, and all of a sudden, back right as we hit into 2014, we were hitting roughly 13% year-over-year gains, which is great. And from my understanding and looking back at real estate prices and talking to realtors, it's anywhere between 6 and 8% is kind of the historical average gain for real estate year-over-year. Now, as you look at this chart, there's also, I'll highlight this one back here, which I started off talking about 2009 to 2010, obviously the 2009 lows, we had a massive contraction, huge financial crisis. We're looking at almost a 20% decline in housing prices year over year. And then within a year, we were back at 5% gain. So there are big swings, but there's also these very large pullbacks in price. Now, during this run-up that we've had over here, starting in really 2020, late 2020, I was kind of expecting it to have a pretty significant pullback, yet we only have this little blip right here. Really, the tail end of 2021 was the only little pullback, and then it continued on up. And as soon as we breached this 20% year-over-year growth, I was like, man, this is way out of line. This really, to me, was kind of the signal that this is completely screwed up. It's got to come back down. And you notice we are now, in fact, getting a pullback. The most recent number that came out today was 16.1. I actually have the economic data here, so let me see if I think I put it on here. Let me see if I can bring up the economic calendar for you guys. Well, I guess I may have covered that one up. So I had the economic data there for a second. Let's see if I can bring up the chart for you just to make it easy. Here is your economic data with the current numbers. So I'll show you this. Here is the CaseShiller Composite 20, and they were expecting previous was 18.6. Pretty much everyone's expecting a decline, so that would have brought it to 17.1. We came out at 16.1. Let's be honest. That's still a fantastic number. 16.1% year-over-year growth is great, but I think it's obvious and clear to say that it's been a sharp decline over the past couple of months. Now, there's also the HPI numbers, which were expected to drop, to remain unchanged, meaning no gain in home prices. And for those who might not know, HPI data, those are homes that are backed by Fannie Mae and Freddie Mac mortgages, right? Just those two entities, but that's a ton of mortgages. So it's basically saying houses purchased backed by those loans, are they going up in value or going down in value? And in this case, you can see we had a contraction in HPI of 0.6%. Now, this isn't like catastrophic. It's just not gaining, which means it's slowing down, potentially rolling over with HPI. So let me show you the HPI data, which I think is very interesting because as soon as the pandemic hit, it's just like property values just started to surge. And all of us that are homeowners are going, yeah, bring it on, baby. Keep that rallying, right? We love having housing prices accelerate. Of course, this puts a big crunch on consumers because rising housing prices typically leads to rising rents, which leads to inflation and leads to people being priced out of the market, which I think we are in. The number that came out today for HPI data, they were expecting it to be 0. We came out at negative 0.6. So this is a pretty ugly one, considering that between 2012 and the announcement that came out today, so call it a decade, there have only been 2 data points that have been below 0, meaning no growth for homes. And this is the biggest one we've seen. Now, of course, we could look back here in 2008, 9, 10, 11. You saw a bunch down below. So it doesn't mean that this is, going to crash everything. It's just, what are the trends? What's the data showing me? In this case, it's showing that home prices are starting to decline. Now, to really hang my hat on a big downtrend in real estate, I need to see, a couple more significant declines in home prices, and I do expect that at the next reading. So today we got the reading for August. I'm really interested in what's going to happen for the October numbers, right? Do we see that decline even more? If so, I think that will put a lot of negative pressure on the equity markets going into the final stretch of the year, into our fourth quarter. All right, what else do I have for you with regards to housing market? New home sales. Oh yes, look at what happened back in 2006, right? 2006 to 2009 was absolutely incredible, and it's funny because most people weren't talking about a housing bubble till like in here. It had already popped. It was already going down significantly as we went into the housing crisis or the financial crisis, the housing bubble, whatever you want to call it. Of course, we bottomed out in March of 2009 in the equity markets, but the housing market still stayed low for quite some time, really starting its surge from this low point here back in 2011 when we were looking at roughly 300,000 new home sales. Now, things have been looking great, right? This is a beautiful uptrend, but you can see it starts to get a little crazy where I put this big red oval. You can see the huge surge from the 2020 lows to that peak. We had over 1,000 new home sales. Now, of course, this is in hundreds of thousands, in thousands. So this would be 1 million new homes. This is 685,000. Bottom line is great growth all the way through 2021, and then, as expected, a pullback. Now, the question becomes, how sharp is this decline going to be? How deep is it going to be? What we do know is the trend is down at this point, and I'm expecting that to continue until it doesn't. Now, the number we had today was much higher than expected. So HPI numbers were worse than expected, did not look good for anybody who's looking at HPI data. When you look at the S&P CaseShiller Composite 20 Home Price Index, that was worse than expected. But then we look at new home sales, and that's looking pretty good. Now, why is that important? It's important because Margaret wants to know about home builders, right? I think Margaret even says in there, can we cover housing stocks, please? Well, let's take a peek at some of those housing stocks to see how they have performed. Let's switch over here to camera 2. And we'll just look at some of the big names out there. Let's look at Toll Brothers, right? And it's kind of deceiving a little bit because or at least I won't put you guys in that category because I speak for myself. I kind of stuck with this impression that a home builder like Lennar, KB Homes, Pulte, that those are single-family homes, and that's not true. These home builders will shift their building preferences, and sometimes they might focus on single-family homes. Sometimes they might focus on multi-unit facilities. Diana Hill, who used to run Online Trading Academy's real estate program, always emphasized that to me. She says, look, these guys will shift and change what they're building to accommodate for market demands. And as this market starts to crash, you just take a step back and think, what would happen if the housing market crashed? And we get back to a situation, and I say, what if, right? I'm not saying that it's guaranteed, but what if, hypothetically, housing continues to slide? We see existing home sales slide. We see HPI numbers start to slide. What will happen is people, number one, are going to get priced out of the market, so housing prices will probably start to drop. Number two is some people may get pushed out of their homes from an inability to make their mortgage payments because the economy is starting to slow down and retail sales numbers are starting to look pretty bad, right? That could change as well. So, you would think that that would drive a lot of people who might be homeowners to move over towards, I need to rent. So what will happen is Toll Brothers and Lennar and some of these other groups will start building multifamily homes, knowing that someone's going to come in and buy, or maybe they could just build for the city or some big company, a giant multifamily apartment building like Irvine Company always does here in Southern California. So exactly, Chase, multifamily rentals. Yep, and I agree with Big Ev. I wouldn't say that they're fairly smart. I'd say they're damn smart. I mean, they have their pulse in the economy. Not only that, I'm willing to bet you that there are representatives for Toll Brothers, Lennar, KB Homes that are on Capitol Hill, getting a sense as to what the politicians are doing, lobbying for specific things. And again, we don't have the resources to do that, but they do because they got billions and billions of dollars. And the tract homes will shrink in size. Yeah, we're going to go from McMansions, right? We'll go from these 3,500 square foot homes to maybe 1,200 square foot homes and have big tracts like that to accommodate a lower price. So, when we look at home builders like I got Toll Brothers here, I think it's a little deceiving because they're morphing their game. That said, look at where they're at. I mean, if you go back to their all-time highs, which is back here in December, it's down significantly for Toll Brothers, and it's pretty much for every home builder right now. Toll Brothers is down roughly 46%. And I know a lot of people would say, man, that's a great buy. I got to buy some home builders right now. Well, I personally would say wait. I think you might be able to buy this at a cheaper price, especially if things keep dropping down. Now, I've had this yellow box drawn in here for ages on Toll Brothers, all the way back to 2020. But notice we have not been able to break Toll Brothers, this low right around 40.43. If that breaks, I think you're headed back down to this $29 mark, which is a bounce point all the way back into 2020. Right, not looking so good on Toll Brothers. So it may seem enticing because they're trading at almost 50% discount. But you know what? That 50% discount could turn to 70, could turn to 80. I don't think that they're going to go under. But I think Toll Brothers is one of the lead dogs out there. But the trend right now is obviously down, and that's the same thing for something like KB Homes. Here's another one. Notice it actually looks a bit weaker. If I go off that all-time high to where we are right now, it's about 52% slide. So, markets definitely not down 50%, but home builders are. And that may be anticipating, because I feel like, I mentioned this before, it seemed like when we had the housing crisis that home builders were selling off before the market. And let me see if I can show you a representation of that. So notice here when home builders like KB Homes really started to take a dive, right? That was 2005. Let me just try to show you the date here. 2005, August, KB Homes was at $85 a share. By the time the financial crisis ended, they were right around $8. Now let's look at, let's say S&P, just for giggles to line those two things up. Oh man, I got too much artwork on here. Let's go to SPY. Let me get rid of that as well. Okay, so we go back to 2005. The market didn't start selling off until November of 2007. Yet when I look at that KB Homes, they were selling off in 2000. That was 2 years before the market started to really fall apart. Now, I don't have a lot of justification as to why that would be. Why is there such, was this a leading indicator? I don't know, but I was certainly watching that as home builders sold off recently. Like, okay, does this mean that we are looking at a much bigger downslide here in a year or so? And if that's the case, we have to look at this data and say, well, maybe this is foreshadowing that recession that so many people are talking about, and I personally think that we're in. I think they'll maybe upgrade it to possibly a depression by 2023. And if that's the case, then home builders are going to continue to slide. So I don't think jumping on home builders would be a prudent decision at this point. Let's look at Lennar, another major player in the space. And Margaret, if there's other companies you want me to take a peek at, let me know. I'm happy to look at different real estate companies. Here is the monthly of Lennar. Here is the daily. And again, same picture. It's fared a little bit better, down roughly 37% off of those highs that we saw back in that was actually November that Lennar peaked. So they're not looking good, and now I think that the data is starting to pile up a little bit worse than anticipated. Now, I have some more data to go through here with you. I talked about new home sales. Let's talk about existing home sales, because that's one that is of interest to a lot of us, especially those who have recently sold a property. I hear so much on the media about, people are lowering their prices. It's the largest amount of homes that are currently listed that have declined their price in 20 years or something. Okay, great, fine, whatever that means. Let's look at the data and see what it's showing us. So here is new home sales. Let's get over to existing home sales. this one should be somewhat concerning because we've had this nice influx. And again, I know we have a lot of people listen to podcasts. I apologize if you can't read these charts here. But if you go back to 2006, you can see that there was that really big decline in 2006, 7, 8, and 9, a surge right at the bottom in 2009, which is kind of interesting, and then just a slow build up. Now, we haven't had too many aggressive slides, and I mean real sharp ones. The last one I see here I would call like extremely aggressive would be this slide here that happened in 2010, and this one here that happened right as the pandemic hit in 2020. But look where we're at right now. We were at 6.5 million existing home sales back in January, and we've dropped to 4.8, meaning a couple of things. Either there's so many homes in the market that people just aren't buying them, or buyers are just backing away, maybe even not even qualifying to purchase loans. And we'll look at that here as another example of why I think that we are in a serious problem with regards to real estate. And I got to give a shout out to my dad. I apologize. My dad's a realtor, and most realtors are ever optimistic. I apologize. I know we got realtors in here, but if you talk to a realtor, generally a realtor will say, "Oh yeah, no, the market's fine. We look at historical is going to be 8% gain per year. It's going to be a little slower, maybe 3 or 4." Very rarely do you see a real estate agent come out and say, "Yeah, I'm looking at 10% decline over the next year in housing prices." You kind of don't want to do that. You're kind of shooting yourself in your foot. So, Pops, I think it's going to be ugly for you for a little while with regards to these housing markets. But there's your existing home sales, pretty ugly. 4.8, let's be honest, is still a pretty good number. 4.8 million homes sold. But what's the trend? You guys all hear me say it. The trend is your friend to the bend at the end. And if that's the case, existing home sales is painting a pretty ugly picture. Now, maybe the question is, how low do we go? Let's have some fun here. I did a poll on S&P prices. I asked you all, I said, what do you think the S&P is going to be at the end of the year? I wrote all of those down. We'll see what it looks like at the end of the year. But let's do another one for end of the year, and I will keep a spreadsheet. I'll go through the chat and get all your names and write them down. But I'm curious, let's see when the last existing, real quick, let me look and see when the last existing home sales number is for the U.S. markets. And what I want to do is I want you guys to type in, what do you think the number will be for existing home sales? Remember, right now, it's 4.8 million were sold in that month. And what is it going to be for the end of the year? So let me give you a date so we can all kind of say, all right, here's that date you're talking about. What's the end of the year look like? And we'll do a show where we just talk about housing. I believe that existing home sales number, here we go, is going to happen Wednesday, December 21st. So by the time we get to Wednesday, December 21st, type into the chat what you think it's going to be. We're currently at 4.8. You can see going back the last 16 years, we have not been below, it looks like about 3.8. I think 3.8 was what we were back in 2010. I can pull up a chart here and check that one for you. Here we go. Here is your existing home sales data. I will zoom out. But let me know, type in the chat what you think the number will be, just so you know as a reference point. This low point that we had on August 10th, or August of 2010, was 3.83 million homes sold for the month. That's the lowest we've seen in 16 years. So type in the chat. Karen says 2.5. I'll let you guys all type in something just so we have some fun and interaction here with the prices. I will write them all down, so if you're bored at home and don't want to participate, just do it. Do me a favor. Type something in there. One of you is going to get it. If I had prizes, I would send you guys something. But yeah, I think I won't say what my number is until after this. But yeah, 3.4. So Liz, you think we're really headed for some tough times. Karen, you think this apocalypse, huh? 2.5 would be pretty damn low. However, yeah, by the end of the year. So December 21st is when the last number comes out. So if you look here at this chart that I've got up, you notice it says Wednesday, December 21st. I'm saying by the time that announcement comes out, right? When that announcement comes out, that will not reflect the end of the year. That will reflect November, through November. So that's what I'm looking at. And we could either make it the December 21st meeting or the January 21st, but I think it'd be fun to do the December one, just for fun. Anyway, yep, end of this year. Cool. 3-ish. You can't say 3-ish. You got to give a number. That's part of the fun. It's not like you're going to be right or wrong. I mean, most of us are going to be wrong because only one number is going to be correct. But James is really trying to get specific. 3,952,111. All right, James, I'm with you. Awesome. All right, cool. Well, I got a bunch of readings in there which we can look at. Let me go one step further because existing home sales is important. But another issue is homes that are under contract. Are they going through or are they falling out because of what's gone on with the 10-year? Here is existing home sales, and there are your pending. Now, don't worry about the cursor. When I screenshotted it, it looked like that. Notice the trend that's been going on in pending home sales. And it's really started going back into 2020. It seems like there's a lot of it down below zero. This, to me, looks like a trend, even though you don't normally get trends with pending home sales. It always oscillates above and below zero. Well, that number seems to be getting a little bit bigger down below zero. So that's one last piece of the housing data puzzle that I wanted to show you and kind of paint that picture for it. So that's my quick rundown of what I think is the housing crisis ahead. I think it's going to get a little bit worse. Even commercial real estate, I think, will start to face a pinch. I look at just all my friends, and I think many of you are in the same situation. Some of you might actually be working at home instead of going to the company full time. And more companies are going to say, you know what, we don't need to work from an office anymore. Let's maybe do a WeWork type of space where we rent it out once a month and have a meeting, but we really don't need all these people there. Commercial real estate could take a big hit as well. I think they probably are, but I have not looked at that data. Okay, so there you go. That was my take on the housing. I think it's going to be bad. I think we're going to see housing drop. The question is, how far? Are we going to see a 20% decline from here, a 30%, a 50%? I don't know. I think that there's too much money out there. Even though mortgages have been shooting up, they're still historically cheap. I mean, let's look at that 10-year. We've been looking at this one quite a bit. We dug into this one yesterday. Your 10-year was up yet again. And we're still, let's call it 4%. You're at 3.95, so let's call it 4%. You add on, maybe 2% to that, and now you're looking at your 30-year fixed rate mortgage. Well, that's going to be about 6%. Well, this to me has more to the upside. I think we're due for a pullback, honestly, in the 10-year just to see the yields drop a little bit before we get the next leg up. Just like we were looking at it back here, it accelerated very quickly. It's going to have a pullback and then rip to the upside. The question is, do we stop here at 4% briefly, or do we just rip on through and go to those higher levels? If that does happen, if this acceleration continues to happen, then I think it'd be much more problematic for the housing market. And again, remember, the Fed is unwinding their balance sheet. They're selling bonds. So if they sell these things and they're flooding the market with 10-year product, if they don't get a lot more buyers, then they have to incentivize the buyers by raising the yield or offering more yield, which could push that 10-year to 5, 6, 7% in a short window of time. So all to be determined what happens. Nobody here has a real crystal ball in the future, but I always love looking at data like this, like those pending home sales, those existing home sales. This type of stuff I find fascinating because it does very clearly show you the change that's going on with regards to that data. Doesn't mean that this is the end, all right? Doesn't mean it's over. It just says, here's what's really going on out there, and we can formulate a plan around that. So, and certainly, when we look at this, there's going to be areas of the country that are going to get hit much harder than others. Generally beach town communities, like kind of where I'm at, fare rather well because it's the beach. Now, I'm also in California, which many people feel is having an exodus because of all the laws and the taxes and costs, and moving to places like Idaho or Texas and really seeing a big surge in property values there. I wish I didn't sell my house a few years back in Austin, but it is what it is. Let's see, Big Ed said, I'm waiting for a good drop to pick up a retreat cabin in the mountains. Yeah, that'd be great. I saw that one early on. Tom, no, I did not buy a place in Big Bear. I made an offer and I've been looking, but I have not. Let me see if I can get that full question. Did you ever get that Big Bear home? These second home vacations tend to drop faster and more. So, yep, exactly. So I'm waiting. I'm absolutely waiting for that, and I think I need to get myself a season pass to a ski resort before I'm too old to snowboard. Right? There's going to come a point where I'm like, my body just can't take it anymore. And even though I'm coming up on a pretty milestone birthday, I'm still ready to go out there and tear it up with the best of them. No backflips anymore for me, but I can still snowboard with the best of them. But no, I did not buy the home. I've been keeping my eye on it, but I do think you're going to see more downside, more pain for those vacation rentals as people are starting to sell those, pulling money a little bit. But again, I'm going to wait probably 6 months. I think gut feeling is I'll probably wait like 6 months or so before I really get active and look. I might be able to make an all cash offer and just pick up something extremely, extremely cheap, and that's really what I'm looking for. Need the oil prices to come down. It's used in vinyl siding, shingles, piping. Yep, certainly. But James, again, it depends on where you live. You could look at certainly oil prices and being a factor for petroleum-based products. However, another major factor has been lumber. Well, look what's gone on with lumber. I mean, hell, we could just go back. I'm not even going back that far. We could just go to April of this year, March of this year, and lumber is down 67%. This is clearly helping the housing market, right? If this didn't happen, I think the housing market would be in a way worse shape. Oh, Big Ev, you're too kind. I don't 40. Boy, I wish I was. Oh gosh, I remember my 40s like it was yesterday. Look off the all-time high. If you go back to this all-time high, which really wasn't that, not all-time high, the most recent high, which was in May of 2021, lumber's down 74%. I mean, that is absolutely going to impact home construction. But you're right. Crude oil, petroleum products, plastics, that's obviously going to be a major factor. They're changing. They're changing it, Jimmy. They're saying that they have to change the name of Squaw Valley because it's racist. I'm like, man, we have become way too soft as a culture. Anyway, let's not let me get going down that rabbit hole. Lumber is down, but it's still up from 2 years ago. Correct. I mean, if we look at that longer term trend, I mean, it is up. I'll zoom. Let's go to the monthly on this bad boy, or weekly, just so we see a bigger picture. You look at, it's surprising lumber remained relatively constant, right? It just oscillated back and forth between, let's say, a high of, let's call it 470 and 145. Now it's a big swing, but you never saw the real apocalyptic type moves like we did until 2020. That was just insane. Of course, a lot of that happening because of mills shutting down because of COVID and just supply chain disruption, etc. But are we getting back to that historical norm? I would think so. It appears that way. Let me add on a 200 period moving average here. That'll paint us a better picture of it. And this is a 200 week moving average. That's much longer term. You could make the argument that we're below the moving average. However, I believe that this data we saw that went all the way up to 1700 is way overdone. I think this was an absolute anomaly with regards to price. So lots of factors impacting housing. I know some of you probably are still bullish on it. That's okay. Don't take this as any sort of guarantee the housing market's going down. It's just the trends that we're seeing are showing weaker data. There's the composite 20 home price index. You can see that pullback in HPI data. You have new homes declining. You have existing homes declining. Pending home sales declining. So right now, not the prettiest picture for the housing market. I guess the question is, how do we capitalize on it? It would be nice if we could sell covered calls against our property, right? If I could sell a covered call against my property, I probably would be unloading those things right now. Just you want to buy, just load it up. When will home builders make their new home projections? Don't know. Unfortunately, Skilled Stocksman, I don't follow them that closely. I don't really listen to the earnings conference or anything like that. Occasionally, I'll dive into them and see what they say, but I don't know when those announcements come out. All right, so on that note, I wanted to get to a question from where I had you on here, Tom. Oh, I want to get to this one because I think it's slightly incorrect, but Tom made a good comment, but I want to make sure that my perspective was not misheard. Tom says, you at least once echoed the narrative that the president has no sway on energy prices. I don't believe I said he has no sway. I think that the administration doesn't have he can't control, is what I said. I said the president, he can't control energy prices. There is a lot of free market forces out there, certainly talking about OPEC and Russia and things like that having a massive impact. However, there are a lot of things that the government and our current administration could do to appease things here in the U.S. Absolutely. I'm not saying he's got his hands tied and can't do anything, but to do some of the changes, it will take some time to get on track. And I'll read some of the ones because I think you're absolutely right. I don't know all the details about the pipeline issue, but here's what Tom says. The reality is the president has 3 executive orders at the start of his term that stop the Keystone Pipeline, reduce exploration, and vastly reduce the amount of land leased for energy production. I didn't realize how restrictive until I found this from the EIA energy industry article. President Biden's Interior Department leased 126,228 acres for drilling through August 20th. His first 19 months in office, the analyst found no other president since Richard Nixon in 1969 to 70 leased out fewer than 4.4 million acres at this stage in his first term. I believe we have the least amount of land in use since World War II for petroleum production. By restricting supply, prices go up. Energy is involved in every product and services, so it's a key factor behind inflation. Do you think that the energy policy is a big factor? And if the current energy policies are reversed, how long do you think it will take to recover from the Fed energy policy inflation? Whew, man, long-winded, lot of stuff there. So certainly there's things that they can do. Obviously, opening up the reserves is one step, but you could, as an administration, offer incentives to get frackers and oil drilling companies back online and seriously increase production. Keystone Pipeline might be another issue to get that. But I think you have a lot of environmental obstacles and hurdles where I don't believe you could do that in the switch of even with an executive order. There's going to be a lot of pushback in that area. Can we get it back online? Yes. Can we start to increase production? Absolutely. And that probably would be a good move because at this point, I think it's safe to say that one of the biggest arguments, I don't make this political, but one of the major arguments against the Biden administration for all the things that people complain about is what's happened with energy and his inaction to get energy prices down. Now remember, he doesn't single-handedly control the price of energy, but if he brought the Keystone Pipeline back on, he increased a bunch of land leases and got fracking and drilling at a much higher level, then yeah, we would see energy prices start to drop. I mean, don't forget, the U.S. is still the #1 oil-producing country in the world. And we are significantly higher. I'll bring up a chart here I looked up for you guys. We're at 14.5% of the global global oil production comes from the U.S. So there is a chart down at the bottom. You can see the legend and timeline, but this blue one here, I'm assuming that's blue, teal line, is the U.S. And really since 2009 is when we surged aggressively, called 2006, 7, 8, 9, really aggressively moved to the upside here, putting us in #1 at 14.5% of the global production of oil. Russia's at 13.1, Saudi Arabia 12.1, Canada 5.8, Iraq 5.3, and of course you have a lot of other countries in there that are smaller, but over half of the global global oil produced comes from those 5 countries. Now, could we increase that and maybe get ourselves to 16, 17, 18% of the global supply? Sure. However, I think what would work better is if we could convince or get other countries like Russia, well, let's just scratch Russia off the table because they're not going to be supportive in any way, but get Saudi Arabia and Canada and Iraq to increase production. Then you will start to see more oil flood the market and therefore bring prices down. But could the U.S. do more? Totally agree. I think we export natural gas. Yes, we do. We actually export oil too. Wouldn't it be interesting if we just said you're not allowed to send oil to any other country other than the U.S.? We probably wouldn't have the issues that we have. We probably would not have an oil issue if the government just said oil has to stay in the U.S. If you're pulling it out of Texas, it's staying in the U.S. Let's set up infrastructure so that oil stays here and we'll become self-sufficient. However, geopolitics and the need to have business all over the world has forced us to sell oil all over the world and natural gas. Crazy. He shut it down with 3 signatures. Stopping it, Tom, what I was saying is stopping a pipeline, stopping land leases and production is easier than starting it all back up. Starting everything back up requires all kinds of safety checks, making sure the equipment's still there, making sure the pipeline is still safe and secure and sealed, and having all sorts of regulatory sign-offs to get that flowing again. That's harder to do than say, stop production right now. We're stopping on that, and I'm not leasing any land. So I think it's to start that machine back up is way more challenging than to just say stop that production. So yes, he had a hand in the rise of it. Maybe he can get himself out of it and get us better energy prices. Now we have seen oil drop considerably, but still a long way to go. I saw somebody post the other day that they think gasoline at the pump is going to be $2 a gallon here soon. I was like, man, I would love to be smoking what you're smoking because I don't see $2 a gallon for gas at any point in the future. All right, what else do I have? Oh boy, did I spark a whole bunch of comments? Merlin, I thought money value like the dollar was based on the value of commodities, yet the dollar is getting stronger and the commodities are falling. Well, no, the dollar is rising based off of demand. So right now the demand for US dollars is increasing. It's all a supply and demand curve, right? I could draw a graphic here, but I don't have time to go through the graphics. But if you have demand for an asset or a commodity increasing, and let's call the dollar a commodity, demand for that is increasing. Why? Because people are trying to buy or use their dollars or buy dollars with their foreign currency, converting that euro to a dollar so they can buy things like the 10-year to get a hold of a lot of this great yield, or just to have dollars because of the carry trade that I mentioned. So demand for dollar is surging, and then you have the removal of money supply by the Fed. You have demand increasing, supply dropping. That's why you're seeing that dollar index surge like it has been. That's why I kind of thought it would be good to do that show yesterday, which I guess gives people a better understanding of what's really going on with that dollar. Here's what the Dixie did today. It was up again, ever so slightly, but still up again. There you go. You know, my gut was telling me we'd have a pullback. I actually thought, and it looked like we were having a pullback, but then just rallied back up. You saw our equity markets as well. They were looking really good for part of the day and then just started to give it all back. That energy just tanked in the broad market indexes. So let me run through our top 7 here just because I'm on that part of the show. Bitcoin, not good. I have been listening to let me get this moving average off here. I've been listening to the 5-hour seminar that was done on cryptocurrency and digital assets over in France. Very interesting listening to a lot of them. I think it's right in line with what I expected them to say. Really talking a lot about the need for regulatory, the need to have guardrails put in so the average consumer doesn't get hurt. What I really love is, for the most part, the talk track was not kill crypto, kill digital assets, kill DeFi. The talk track was, we need to rein in the recklessness that's going on with some of them, but the need is there. The opening presentation was fantastic. I can't remember her name, but she was saying, look, it's clear and obvious, and we all agree that technology and innovation is changing the way our financial markets function, to which I'm going, hallelujah, that's why we built this crypto class, is understanding that there's so much change about to happen in our country and a global economy because of digital assets and just the speed, efficiency, and transparency that it brings. So listening to that presentation was really good. Jerome Powell didn't really do anything to shock the crypto market, but it did ultimately start to push it back down, as I think the expectation is there will be pressure from regulatory agencies on these markets for a while until they get their act together and actually come up with some definitive plan for what to do with crypto and central bank digital currencies. So you can see this long topping tail on Bitcoin. It was looking great today. I was loving my account, and then squashed it all the way back down. Very negative for Bitcoin to see it looking so good and ultimately end the day down 0.7%. Here's your Dow futures. Not much is here. Song remains the same. The trend is down. Periscope. Now it is past that lower demand zone. As I mentioned, it's going to be seeking out a new demand zone. And if it's not stopping at 28,350, it's coming all the way back down to these lows right around 26,000. Here's your S&P 500. Down ever so slightly today, but look at the range. It was way bigger than yesterday's range, closing near the lower half of that range, which is obviously negative because the sellers came in and pushed it all the way back down. So not the best picture there for the S&P 500. Gold actually eked out a gain. Happy about that one. I have some call options against my GLD position, which I'm happy about. Same with my silver. Nice to see a day like today. Moving back up a little bit. You only had a 0.19% gain, but at least it's something green on the screen, which we didn't get a lot of. Now, surprisingly, the NASDAQ 100 held its ground today. Let me get this blue line out of here. NASDAQ was up 0.15%, at least what the futures are as of right now. Same picture, though. I look at these last 2 days, and I just still see a lot of negativity. Even though I've got a green candle, a positive day, a lot of negativity, primarily because of the way it closed. That long topping tail above it just does not make me comfortable with going long. It felt like there was going to be the bounce. I was anticipating there being a bounce. I thought maybe those Qs could get some wind under its sails and maybe get itself up to 12,000. Well, it got to 11.6 and then just came crashing back down, finishing at 11,333 for the triple Qs. Not good. I really wanted this to have some legs. If it can't get legs, meaning it's not going to run, this thing's going to drop even faster. So be careful over the next few days with the NASDAQ 100. Here's your Russell. It was actually a bigger green candle, but still the same picture. Long topping tails for the last 2 trading sessions for the Russell futures. Even though it's up 0.55%, still rather bearish because it closed near the bottom of its range. And finally, crude oil. Yum. Little bounce for crude oil. Looks pretty much like the Russell 2000. It still has that longer topping tail, but it was the better of the main market indexes that we looked at today. So there you go. Let's see. Does Powell really know anything about crypto? So I assure you at this point, Powell is talking to industry experts. I think he has a greater understanding of it, but I still don't think he would be able to hold a conversation on, proof of work, proof of stake, consensus algorithms. Let's talk about directed acyclic graphs. Now, I don't think he's going to understand any of that stuff, but he's going to know a few things. Number one, he'll know about transparency, meaning centralized cryptocurrencies versus decentralized. So looking at something like Bitcoin, which is very decentralized, even though you can say mining pools give it some centralization, to something like Solana, which inherently is more centralized now because it's really controlled by one major entity. Looking at a central bank digital currency, he for sure is versed on CBDCs and what that might mean. Just by a show of, just as a poll here, How many countries right now around the world are working on implementation of a central bank digital currency? Type in the chat what you think. It might surprise you. Out of all the major countries in the world, I don't know how many countries are in the world, I guess is a better question. Good old Google. There's 195 countries in the world? Wow, I thought it was way more than that. So out of the 195 countries in the world, how many are actively working on CBDC, a central bank digital currency? Big Eb says 24. Wow. The actual answer is 100. There's 100 that are working on the development. Now, Thomasina and Margaret probably watched the presentation because currently there are 10 countries around the world that have implemented a CBDC. So, Chris, you win the award. I'll give you it for half. Yeah, she was mentioning 100 are currently in the process of building and developing the technology for a CBDC, and 10 have implemented one. I thought that if that does not tell you that there's acceptance there, I don't know what does. Half is big. Yeah, great guess. So there you go. Just little. I'm sure that you're all going to have that question on Trivial Pursuit sometime soon, which is how many countries are currently exploring central bank digital currencies. 100, and how many have implemented. And I don't have the list of the ones that have implemented them already, but 10, she was saying in the press conference, are there you go, done. So I thought you might enjoy that. NJ, Marion, what happens when the person you look up to trading doesn't hit trades anymore? At times, it got in the middle of my bigger picture view order. Are you saying you have a mentor that you're following? So yeah, Jimmy T, they use Bitcoin, but is that a central bank digital currency, or are they just using that as a currency? So I'm not sure exactly there. Merlin, you don't want members joining Merlin's show? A lot of YouTube channels do. I'm confused, NJ, is what you're asking me there. I'm not quite sure what you're meaning by that, but I would say this: there's always gonna be people you look up to in the trading world. The most humble ones who aren't braggadocious, who don't post pictures of their gains all the time, they're probably the better ones. The ones that are always posting, hey, I made this much money, I made this much money, I made this much money, a la Sam Seiden, who does it all the time on his thing to get people to sign up for his school. He'll always post, look at this trade. Oh, we nailed it. Oh, look at this trade. Oh, we nailed it. Look at this trade. Oh, we nailed it. Yet he doesn't take those trades with real money, and he doesn't show you all the ones that he missed by calling out hundreds of levels per day. Is that an idol? Is that someone you want to look up to? Probably not. That's, I don't want to say the term, so we'll just leave it alone. Finding someone who you really believe in and trust is a challenge. I have found in my trading career, I think that most of the prolific faces are just scammers. I think that they probably deep down are actually losing money as traders, but they're convincing people that they're doing well and getting you to buy their proprietary training program. And then you're with it for a while and you're like, wait a minute, I'm not doing so hot. Yeah, I know. I had to throw a Sam Seiden reference out there today. Just go look at his Twitter page. Actually, don't, because you're going to give him support. But it's always like, look at this page. We call this level here. Sorry, I'll do my impersonation. We call this level here. You see the demand zone, and it went all the way up to supply, and we called that trade. Yeah, and it hit. Yeah, okay. And the 7,500 other levels you called that didn't hit would have cost your students money. How'd that go for them? Yeah, I don't know. I think most people I've seen over the years, I would say out of 100 people that I would meet at a Traders Expo, probably half are full of it. Probably half. Of course, I don't get to see their trade statements. I'm not going to see their balance sheet, but you can kind of tell who's actually making trades and knows what they're doing. I met $1 million. Said, "Yeah, good job, Lori." Oh, Margaret. Oh, that's harsh. Oh, sorry, I'm bad. Oh, yeah, I guess I probably should be like this. Here's my impersonation. Make it like. So, when you're making trades, the supply. Sorry, I won't do that. It's just too bad. See, I go on vacation. I got to pick on poor old Sam. He's just trying to make a living out there. God. Well. Like I say, someday, there should be a documentary or a book. But see, the problem with that is if you expose Sam Seiden and you say all the things that he has done, all the actions that he has done, and all the harm that I feel he has caused, there could be some problems up front. So once you get past some legal issues and see what I can legally expose and document, I would love to do it. I would love to just say, guys, if you just knew this stuff, then you'd understand a lot more why I have such hatred. Did Powell say something negative about cryptocurrency? No, I think what happened was most of the central bankers and politicians that were speaking on cryptocurrency actually were rather positive, but just saying we must regulate it. So I think it makes people feel a little bit worried that there's going to be a lot more regulation coming. And what is that? How long is it going to take? And maybe governments will play hardball for now until they get that framework in place. And as I mentioned, I don't believe that the U.S. is going to do anything with regards to rules and regulations until the end of next year. I just think we've got too much stuff on our plate. I do think that stablecoin regulation, if we don't get a better framework by the end of this year, it'll be Q1 of next year for stablecoins, and then it'll go into DeFi projects, it'll go into exchanges and the rules around them, listing of ICOs and new projects coming to market, and then clarity on what are tokens and what are securities. And that's going to take some time to settle all that out. It's going to be a long process, in my opinion. So could be a while. And I think that's part of it, is that uncertainty in what's going to happen and when. So you got a lot of pressure on the market. Need Apple to capitulate, huh? And the CliK to drop hard. Well, you don't need it, but it could happen. If you look at what we're going on with here, I mentioned this the other day. Let's just go look at, since you mentioned Apple. Here's your Apple on a daily chart. It actually looks fairly decent. Right? I mean, even though it's down significantly, it's been oscillating. I think that Apple's been one of the key catalysts to holding this market up. Here's the QQQs. Picture is very different. You guys can see that. Apple's right, the Qs are at lows, looking real weak. If Apple rolls over at all, and let me ask you this, just how much time have we got? Oh, man. Let me ask you this. And type in the chat if you think you know the answer or have a guess at it. With all of Apple's earnings in China, in Europe, in Great Britain, in Australia, right? They're one of the biggest global companies in the world. If they're headquartered in the United States, what happens to those earnings numbers when they convert those international sales back into dollars? You tell me. What happens there when they convert back into dollars? Or do they, right? If it was up to me and I was working for Apple, I actually would not convert back into dollars. And I would have a European corporate office, and I'd split those into two separate entities. And depending on where the dollar or the euro was the strongest, I would move my money there. So let's see. Now, S-RUPS drops. Right, the earnings will generally drop. So let's say Apple does $1 billion worth of sales or €1 billion worth of sales. When they convert that back into dollars, it's no longer $1 billion. It's going to be less depending on what that conversion rate is. So these numbers could actually hurt Apple's earnings going forward. And again, they're what's holding the market up. Apple, is looking way stronger than the equity market. So here's Apple. Unfortunately, I can't do them above and beyond, or above each other. But even the S&P 500, right? We're kissing lows right now on that S&P 500, but Apple still holding. Now we could look at some of the other FANG stocks. How about Amazon? Right? Amazon is still stronger than the market. It's holding up. You can go to Microsoft. It's actually weaker. Tesla's not going to be included in that one. But let's go. We had Apple. I hate using Netflix, because I don't think Netflix is really a FANG stock anymore. To me, this is just a dead, not dead, but I don't think it's a FANG stock anymore. The prospect for growth in that area, to me, is decreased significantly. But Apple, Google's the other one. And Google's down below those lows. So right now, the two that are holding up the market are going to be Apple and Amazon. And if those roll over, then I think we're in a world of hurt. If Apple starts to roll over, and again, their earnings are going to come out here in another month, if they start to roll over and have bad earnings because the dollar is so strong, that could actually hurt their bottom line. Yep, and Tom said it right there. I think Apple stashes cash in Ireland. They do some of theirs, yes. And that was one of the big issues when Trump came over. I believe he gave them incentive to repatriate that capital and bring it. They gave them a tax break to bring that money back in, right? I believe that's what happened when Trump came in, and not just Amazon, but to all these companies that have international holdings of assets. But look at it now. That could potentially start to hurt Apple's bottom line. As Big Eb says, they have $1 billion plus. Yeah, I mean, it's probably the biggest brand in the world. It's pretty crazy. It's just everywhere. You go to any country, no one's gonna be like, "What's Apple?" I'll buy Apple at 110. 110. You know what? I told myself I'd never buy Apple again, but man, 110 would be attractive. I'm still never gonna buy Apple just because it's in my trade plan. I told myself in 2001 I can never trade Apple again, so I'll never actually buy physical Apple shares. Now maybe I'll do some options on it, but will they never admit to bad earnings? Oh, they will. They will. I think they would admit to bad earnings, and they would. And what they would do is Tim Cook would come out and say, "Hey, we're going to have bad earnings. There's going to be less, and here's why we're having bad earnings. Not because of sales. Our sales have been great, but because the power of that dollar, we had weaker than expected earnings, and of course that brings their numbers down." So anyway, just I know, OG. We can't call it FANG stocks. Yeah, well, let's not. I'm not going to say it without the N. We got to have another letter in there. It just won't work. Maybe we could throw Tesla in there, right? Tesla, not quite in the same boat, but here's Tesla's chart, which has been kind of just bouncing back and forth over the past couple of weeks in between 315 and 270. All right, I am going to wrap things up here because we're getting near the end of the show. Here's what's happening for tomorrow. I am sweating like a beast. You have goods trade balance and wholesale inventories for tomorrow for the U.S. equity markets. We also have one more piece of housing data. That's pending home sales, which they're expecting to actually get slightly better. Judging by the current trend, I don't see that happening, but we'll find out. You also have a bunch of FOMC members coming out there tomorrow. You have Bullard speaking. You got Powell speaking. Bowman. It's a pretty busy day for Fed speakers, so be careful. Most of those are going to happen between 7 and 7:30. So Bowman speaks at 8, but it's really the Powell one at 7:15, and these are all Eastern Standard Time. Yes, Eastern Standard Time. And the crude oil inventory is at 7:30 as well. And then down there at the bottom, you can see you have German CPI number as well as HPI data coming out for Great Britain. So that is your economic data for tomorrow. I will be doing my final show tomorrow, Wednesday. I don't have a guest on the program. I was trying to find one, but I've been so dang busy with other things, getting ready to go to Europe, and just got things a little bit too wrapped up. So I'll be doing a show solo tomorrow to wrap things up for the week. Again, I'll be gone Thursday, Friday, and then for 2 weeks, maybe back Friday the 14th of October. And so if you guys have any comments or things you want to discuss on tomorrow's show, since it will be the last one for quite some time, send in your topics. You can put them down below the YouTube video. Any YouTube video is fine, or at least as long as it's TraderMerlin YouTube video, I can see all those comments. Or email me, TraderMerlin@gmail.com. That said, I hope you have a fantastic remainder. Oh, see, G33. What'd you say there, G? Whiskey tomorrow? Whiskey tomorrow. Yeah, sure. I'll have a glass of whiskey tomorrow. Sounds good. All right, everybody. I will see you tomorrow. Email me if you want to cover something on the show tomorrow. Until then, happy trading. I'll see you tomorrow. Take care.